As Sam Bankman-Fried's crypto empire has crumbled all around him, it's safe to say there were red flags all over the place, but we missed them. FTX was a success story almost too good to resist. In just over 3 years, it went from nothing to a $32 billion company. And along the way, journalists, investors, politicians, regulators all dropped the ball. One of the biggest red flags to FTX's demise came from Sam Bankman-Fried, or SBF, himself, during a talk with David Rubenstein, one of the founders of the Carlyle Group and a TV host on Bloomberg. SBF explained his reason for creating FTX came from frustrations he was experiencing at Alameda Research, his crypto-focused proprietary trading firm. Alameda was making lots of money, but had the potential to make more. It was just that venture capital wasn't lining up to give cash to traders in their 20s, regardless of their purported 100% annualized returns. So Alameda relied on putting together lines of credit to build its capital base. By creating his own exchange in FTX, SBF could create a platform tailored to Alameda's trading needs and tick all the boxes for attracting VC money. Now that SBF had an exchange, VC money started coming in. But there was an obvious issue with this approach. Alameda, a proprietary trading firm, would now be under the same leadership as an exchange open to the public. Whether it was planned from the start or a last-ditch effort when things got tough, this structure allowed FTX to be used as a cash cow to keep Alameda afloat. Another red flag came from an appearance in April on Bloomberg's Odd Lots podcast, when Bankman-Fried explained how value could be created from nothing using tokens. What he described was a process similar to what we now suspect FTX and Alameda were doing. FTX's token, FTT, was being propped up by Alameda, and Alameda was allegedly using the token as collateral to fund its own trading activities. Borrowing money to trade has the potential to amplify gains, but it can also lead to devastating losses. While all the details have yet to emerge, it appears so far that Alameda's tactic of borrowing to trade contributed to its demise. Investors who handed over hundreds of millions to FTX might have been mesmerized by SBF's vision, but they were not kept in check by regulators or the media. SBF was a mainstay on podcasts and conferences, a fixture on magazine covers including Forbes, and was very easy for reporters to reach, even on deadline. He also opened up his life to the biggest name in financial journalism. Michael Lewis, the author of The Big Short, was reportedly following SBF around for his latest book. Along the way, few questions were asked about how the company grew so fast, and the cozy relationship built between Bankman-Fried and FTX with reporters may have prevented closer scrutiny. In one particular bizarre incident, Brett Harrison, who was the president of FTX's US crypto exchange, left the company in late September without providing a reason. But instead of asking him why, some journalists decided to shoot a TikTok video with him joking about the situation. Government also had a reason to be chummy with FTX. SBF donated nearly $40 million to candidates during the midterms, testified to Congress on a number of subjects including regulating crypto markets, and the records show he personally met with SEC Chairman Gary Gensler. CFTC Commissioner Caroline Pham also deleted a photo of her and SBF together posted on her Twitter page. But there were some trying to sound the alarm before everything came crashing down. Orthogonal Credit, a former lender to Alameda Research, said it severed its relationship with Alameda earlier this year. In a due diligence on Alameda, Orthogonal pointed out the company had declining asset quality, unclear capital policy, less than robust operational and business practices, and an increasingly Byzantine corporate structure. Mark Cahodes, the perennial short seller known for pointing out market frauds, put it in even simpler terms. In my view, nothing ever added up. I think SBF will make Bernie Madoff look like Jesus Christ.